guys. Hey, hello there. How are you today? So, I want to thank you for joining me today on the first episode of Financial Literacy KE. Welcome and feel at home. This is home for all of us looking to learn more about money, finance, and business. Thank you. So, today we will be looking at a very interesting topic. So, guess what? We'll be talking about financial statements. So if you have a notepad and a pen, sure, let's continue. So what are financial statements? Financial statements are formal records that show the financial performance and operations of a firm, a business, an entity, an individual, or a business. They basically show the financial performance of a firm or an entity or a business. Yes. So financial statements, I'm sure, are prepared in almost every organization, and any organization that is not preparing them needs to start preparing them. They are very critical because if you don't know your financial performance, you can't plan your goals for the company, you can't plan the goals for your business, you can't plan your goals for the enterprise that you are running. Yes. So, what are the four main financial statements? There are four main financial statements. They include, I shall state them first. That is the balance sheet, which is also known as the statement of financial position. Then there is the second statement, which is called the income statement, which is also known as the statement of profit and loss. Then there is the cash flow statement, or also known as the statement of cash flows, and there is the statement of shareholders' equity. Yes, so let's delve into the financial statements to get a wider understanding of the financial statements. What is the balance sheet? The balance sheet is a financial statement that indicates the financial position of a firm. It basically indicates the financial position of an entity. It shows things like the assets that a company owns. It shows the liabilities that a company owes to outsiders. It shows both current and non-current liabilities. And then it shows the equity. What is equity? Equity is what the company owes to its owners. The owners, that's the investors, the shareholders. Yes. So let's delve into what are assets. Assets are what the company owns. What the company owns that can be used to generate revenue. That's what we call assets. And then there are the liabilities. The liabilities are what the company owes, something that that results into a company generating a cash outflow is called a liability. Something that a company owns that can or is used to generate a cash inflow is called an asset. And then the equity shows what the company owes to its shareholders. Shareholders in a company, especially in big enterprises, we are talking about, we have the shareholders, we have the management, then we have the employees. Now, the company is recognized as a separate legal entity from its owners. So it can lend to its shareholders and it can borrow from its shareholders. So that's why we can say that the equity is what the company owes to the owners, that is the shareholders. Yes, we'll be delving much more into them as we get into context in our upcoming videos and such. So let me know in the comments if you have any more questions about the balance sheet. The second financial statement, which is one of the major financial statements, is the income statement. What is the income statement? You might be wondering. The income statement is a statement of profit and loss. It shows the profit and loss of a company. It shows things like the revenue generated. It shows the cost of goods or the cost of generating that service that a company rendered to its customers so that it might gain the revenue. It shows the gross profit. What is the gross profit? Gross profit is the profit after deducting the cost of sale. That is, let's say for instance that I sold a bread for 10 bob and I had bought the bread for 5 bob. My gross profit will be 5 bob. Then if I had sent a rider to deliver that bread and paid the rider 2 bob, my net profit will be 5 minus 3, that will be minus 2, that will be 3, that will be my net profit. So net profit is obtained after deducting other expenses apart from cost of sale or cost of goods sold. That's when you get the after deducting the cost of goods sold, you get the gross profit, and after deducting other expenses, you get the net profit. So we will be delving much into that, how to interpret those financial statements. We'll be delving into how to prepare them and much more. Today, I just want to give an oversight of the main financial statements. And we shall also, the third financial statement, which is one of the major financial statements, is the statement of cash flows. What is the statement of cash flows? Some of you might be wondering. The statement of cash flows is a financial statement that is prepared to show how a company generates its cash and utilizes its cash. So it basically shows all the cash inflows and cash outflows of a company. Maybe, for instance, that the company generates income through, there are several ways through which a company generates money, cash inflow. Generates cash inflow through or operating activities. That is, let's say its operations include barbershop, barbing, doing people's hair, selling hair products. Those are operating activities. Sorry, and then a company may also generate income through financing activities, things that it does to generate finance. Maybe investments in financial assets like bonds, shares, ordinary share capital, selling shares at a premium, and whatnot. And also, there are cash outflows. Sometimes the company there are cash outflows when it's purchasing the goods that it's using to sell. There are different ways through which a company incurs cash outflows. Yes, so we will be delving more into the statement of cash flows. We shall see how the statement of cash flows is prepared. We shall see how the statement of cash. Yes, so on our fourth financial statement, it's got the statement of changes in equity. So what does the statement of changes in equity indicate? It indicates the changes in owner's equity over a specified accounting period. Yes, so it shows things like the net profit and loss. It shows the equity withdrawals, the dividend payment, the effects of changes in accounting policies. Yes, it shows retained earnings and accumulated reserves and whatnot. So stay tuned to this channel. We'll be looking into the four statements of financial positions, the four main statements of financial positions, how to prepare them, how to interpret them, how to know how to easily notice errors that are available in the financial statements and whatnot. So thank you. Stay tuned.